Today, we're going to break down the FHA Streamline Refinance. It's a special government program, and it was designed with one big goal: to make refinancing an FHA loan a whole lot simpler and faster. So, how does it really work, and is it the right move for you? Let's dive right in.
So if you're a homeowner, you've got an FHA loan, and you've been thinking, man, is there an easier way to get a lower interest rate, maybe a monthly payment that's a bit more manageable? Well, you are in exactly the right place. The government created a very specific path that might just be the answer you've been looking for.
Okay, first things first. Let's clear up the biggest misunderstanding about this program right from the start. That word, streamline, it makes a lot of people think free or no cost, but that's not what it means here at all. It's all about making the process simpler. Yeah, according to HUD, that's the U.S. Department of Housing and Urban Development, the word streamline is all about cutting down on the paperwork and the underwriting work the lender has to do. That makes their job easier, which in turn makes the whole thing a lot faster for you. You can think of it like an express lane on the highway, but you still have to pay the toll.
So what about all those no closing costs ads you see? How does that work? Well, lenders can offer that by giving you a slightly higher interest rate on your new loan. That little bit of extra interest pays for the closing costs, so you don't have to pay anything out of pocket. It's a pretty straightforward trade-off. Convenience right now for a slightly higher rate over the life of the loan.
All right, so now that we know what streamline really means, let's figure out who can actually get into this express lane. The FHA has some very specific rules you have to meet to qualify. Let's run through this checklist. First, and this is a big one, your mortgage has to already be an FHA loan. It also has to be current, no missed payments. Now, this next one is crucial. The refinance has to provide what's called a net tangible benefit. That's the main rule. It just means the new loan must improve your financial situation in a real way, like lowering your payment. Also, you can't really pull cash out of your equity. The limit is just $500. And here's something you'll want to hear. There are no income requirements or limits to qualify for this.
On top of those rules, there's also a timing thing called the mortgage seasoning rule. It's basically a three-part check to make sure you have a stable payment history. 1. You've made at least 6 monthly payments on time. 2. At least 6 months have gone by since your very first payment was due. And 3. At least 210 days have passed since your original closing date.
So, let's say you check all those boxes. What happens then? Well, the process itself has a huge advantage baked right in, and you actually get to pick between 2 different ways to handle the underwriting.
And here it is. This is the single biggest perk of the entire program. 0. That's the number of new appraisals you need. Lenders use your home's original value from when you first got the loan, which saves you hundreds of dollars and the weeks of waiting that a new appraisal can take. This right here is the main reason the process is so fast.
Now, when it comes to checking out your financial situation, the FHA gives lenders and you some real flexibility. It's not just a one-size-fits-all thing. There are 2 distinct paths you can take.
So, you have a choice. Path number 1 is called credit qualifying. For this, you'll provide your income documents for a full credit check, kind of like a normal refinance. You have to go this route if you're taking someone off the loan, and doing all this might get you a slightly better interest rate. Path number 2 is non-credit qualifying, and this is the true streamline option. No income verification, no new credit report pulled by the lender. They just check to see that you've been making your mortgage payments recently. The potential trade-off here? You might get a slightly less amazing rate.
So, a faster process, no appraisal, flexible underwriting. I mean, it sounds pretty great, right? But is it the perfect move for every single FHA homeowner? You know, like any big money decision, there are some clear benefits and some real challenges you've got to weigh. Let's look at this side by side. The pros, they're pretty powerful. Way less paperwork, that huge time and money saver of no appraisal, and a much faster closing. And it can be a real lifeline for people who might not qualify for other kinds of refinancing. But the challenges are just as important. It's a closed loop. It's only for people who already have an FHA loan. And like we said, closing costs don't just magically disappear. Plus, for some people with great credit and a lot of equity, there might be other, more competitive, conventional refinance options out there.
So after weighing all of that, how do you actually decide if an FHA Streamline is a good idea for your situation? It all comes back to the fundamental purpose of the program itself.
This quote from the FHA's official rulebook is the single most important thing to remember. It is the non-negotiable heart of the program. The refinance must give you a tangible benefit. If the new loan doesn't meaningfully lower your interest rate or improve your loan's term, it just doesn't qualify. End of story.
So to wrap it all up, this program is a very targeted solution. It's definitely not for everyone.
It was built specifically for current FHA homeowners who are up to date on their payments and are just looking for a straightforward, low-doc way to make their mortgage a little more affordable.
If you're listening to this and thinking, hey, this might be right for me, your next step is really clear. Talk to a professional. An FHA-approved lender can run the numbers for your specific situation, almost like a personalized calculator, and tell you if you'll get that all-important net tangible benefit.
So, we'll leave you with this final thought. For the right homeowner, this program isn't just about shuffling less paper. It's a direct path to real, tangible financial relief. So the question is, could a streamlined process be the key to unlocking a better, more affordable mortgage for you?